Marley Caden. Let's recap the week in the markets. Joining us to do that now is Andrew Graham, CFA and managing partner of Jackson Square Capital. Thank you so much, Andrew, for joining us this afternoon.
Thank you, Marley. Thanks for having me here.
Of course, we're glad to have you. Now, what do you make of this week's market action?
It's been a big week for markets. We changed the entire technical regime basically by breaking through some important levels, and it's all due to resilient macro data, strong earnings growth, and a cooling trade war. So I think it's up and to the right for the time being. There may be some complexity as we get into the end of June and into July. But for the time being, we feel good about the way markets are behaving and feel good about higher levels.
And you mentioned some of that data, and I'm sure you were looking at it. I've been talking about it today. Consumer sentiment, of course, came out a little soft. The markets didn't seem to care. Are we in a bad news gets a break era right now, and good news is good, but bad news will just sort of toss out?
Well, first of all, I think the survey data has been skewed. It's not as reliable as it used to be. We have a real issue, I think, with the survey data, just kind of split upon people who think the world's coming to an end and those who think that the new dawn, a new era is upon us. And I wouldn't read too much into the survey data. But yeah, the data that we got this week in terms of the hard data was all very much in line. Lower CPI, lower PPI, and a little downtick in retail sales. And I think that fits with the whole lower inflation theme, given that retail sales are quoted in nominal terms. So we feel good about the state of the consumer, and we feel good about the near-term upside. We're going to be able to avoid a recession, we think. And if that's the case, then we feel good about the upside for stocks in the near term.
So you feel good about the upside for stocks in the near term. Do you think that the rally is going to continue?
Yeah, we do. We think there's a near-term pain trade. I mean, positioning is still very light. Sentiment is very bearish, and we have a wide open buyback window. So for the time being, stocks are up and to the right. At some point, we're going to have to contend with the closing of the first 90-day window, which I think isn't going to be a huge deal. There'll probably be push-outs and so forth. But in this 90-day détente that we just agreed to with China, you push out the recession probabilities and you push them out to a point where you get more time to book more trade deals, which are GDP accretive. You just saw that happen in Saudi Arabia. You saw that happen with the UK trade deal. There's basically more Boeing more Boeing jets and more GPUs being sold, and that's all GDP accretive. So yeah, we think that we're going to be able to avoid a recession and avoid the worst case scenario.
So we're avoiding the worst case scenario here, but we do have some big earnings coming up. Who are you specifically looking at that you think has the ability to make some big market moves?
Well, I think Nvidia is the report that everybody's going to be focused on.
Yeah.
And a couple weeks. And I think, when you saw Han Hai's report a couple days ago, that was very strong. I think the news out of Saudi Arabia points to more strength. And I'm not entirely worried about the Nvidia number. I think when you take, in total, the Mag 7 earnings in Q1 were much better than expected. 30% earnings growth versus the other 493, which were roughly 9% earnings growth. That's better than expected by all means, and gets things started off, on the right direction. So we're pretty positive on the near term. We got to see how things go. We're sort of in a, make it up as you go kind of policy environment. But and that brings opportunities in many cases, and we feel very positive about the world of AI, particularly coming out of Microsoft and Amazon earnings calls, as well as Duolingo's earnings call.
Yeah, so you just mentioned AI, and we had talked about the return of AI trade. We have some news coming out of the JP Morgan Tech Media and Communications Conference. I know that you have all those details, so can you recap it for us, please?
I think they were good. On balance, they're very good. The TMT updates were good. And we stay close to those sell-side conferences and try to follow every little news bite that comes through. Generally speaking, I think it points us in a direction of software. And I touched on the Duolingo earnings report and earnings call from Q1. But we're going to see other companies as well sort of rise, and we're looking at things like Cloudflare and cybersecurity stocks like CyberArk and others that probably rise to the top here when it comes to this AI trade that we've kind of missed. I think we've been so focused on the tariff headlines and so focused on these, the trade headlines that we've missed the whole start of the AI trade that we wrote off basically 4 months ago, when everybody was worried about the return on capital for all the capex that everybody was spending. It seems like it's showing up if you look at those earnings and you listen to those earnings calls.
And what's on your radar for next week? I know not a huge release week, but what specifically are you looking at?
It's going to be just earnings growth and changes in earnings estimates, and so we're going to be trying to evaluate what's coming through in the aggregate numbers. And I suspect they're going to be ticking a little bit higher when you take down your recession risks. When you adjust all that, you're going to be probably taking your earnings estimates higher, and so we expect that to be the case. But it's not necessarily any sort of big macro data that's going to jolt markets really until we get to the May jobs report, which is going to be in early June.
Well, thank you so much, Andrew, again from Jackson Square Capital. We appreciate your time this afternoon.